Hello, good day, everyone, and thank you so much for joining me today. My name is Wisdom, but most people call me Wizzy. I'm an accountant by profession, and also passionate about digital skills, and I'm a trainer or an online tutor. Specifically, I started this journey to help Zimbabwean entrepreneurs and professionals sharpen their digital workplace skills and unlock new opportunities in this fast changing world. Over the past few months, I've been focusing on creating practical, hands-on courses that bridge the gap between what people know and what they actually need in their businesses and workplaces, especially in areas like payroll, tax basics, Excel, and digital tools. To- Today's session is about the tax insights or the tax mistakes most small business owners make and how you can avoid them. So, let's get right started. I hope you can hear me clearly. Maybe you can confirm that you can hear me clearly. All right, let's get started. All right, we said we are going to talk about the tax mistakes. Tax mistakes small business owners make. Owners make and how you can avoid them. So, the first deadly tax mistake one makes is operating without a tax identification number. Previously, it was called BPN. But now with the change of the system with Zimbra, it is now called a T number. So what are the risks associated with non-registration? One, you get penalized, even you get blocked on tenders if you are trying to apply on tenders, and also you will not have a tax clearance, which would disrupt your business, especially if you are dealing with other companies. So what is the easy fix? When you register your company through this office, the first step within 30 days, you need to register with Zimbra. Now it's simple. You go on SSP, Zimbra, and register your company. Now the process is easy. With the introduction of terms, now the process is easy. So the first risk or the first tax mistake of small businesses make is operating without a tax identification number or without registering on Zimbra their businesses. What is the fix? You just register with Zimbra. Though when you are registering with Zimbra, you need to know the tax types that you need to register when you are a new business owner, especially uh, when you are new. The automatic tax type that you'll be registered on is corporate income tax, CIT. So the first step, when you register, you are automatically registered for corporate income tax type because you are in business to make a profit. You are in business to make a profit. So you automatically register for corporate income tax. So can you please confirm that you can hear me clearly? Can you hear me clearly? All right. If you can hear me, let's continue. So our first tax mistake small business owners make is not registering with Zimra within the stipulated time. How do you fix that? You register with Zimra on SSP Zimra. All right. Text number text mistake number 2 is ignoring VAT threshold. So when you're in business, now they've reduced the threshold for VAT to 25,000 a year. 25,000 per year or equivalent. So when you are making your sales, you are selling. When your sales surpass 25,000 a year, you are obligated to register for VAT. This is involuntary. You are forced or you are required to register for VAT. And the requirements to register for VAT, they will need one, since commencement, sales projections for the next 12 months, for the next 12 months, right? What else? They will need a lease or title deed of the premises that your business is located. They will need 3 months stamped bank statement. What else they will need here? The other item is they will need a letter appointing public officer. So the public officer is the someone who talks or who communicates with Zimra when there are issues that arise with dealing with Zimra. So these are the 5 things when you're registering with Zimra that are needed. First of all, they will need a sales schedule since the commencement of business. Second, they will need sales projections for the next 12 months. Then also they will need a lease agreement or title deeds of the place or the business is situated. 4, they will need a 3 month stamped bank statement. Then also they will need a letter appointing the public officer. These are the main requirements that you are required to submit to Zimra when you want to register for VAT. And the threshold for VAT is now 25,000 a year or equivalent. So if they catch you without registering and your sales are surpassing 25,000, they will estimate and they will assess with an estimate. Sometimes those penalties for back VAT are expensive or they will drown your business, especially your assets. So you need to monitor your monthly income diligently. These days, it's now simpler to monitor things with the technology that we have. You can have a simple spreadsheet where you have your January sales, your February up to December. So it's now easy to monitor sales with spreadsheets. So this is text mistake number 2. Since it's a digital system and it has freed up more time for Zimra to do other work than the manual work that they were doing, that means they can now easily do assessments, they can now easily do visits to different companies because the system is automated and everything is handled with the system automatically, especially on return submission, payments submission. It now automatically uh, credit your payments into your tin without any further person wanted to type or that data to input that data manually. So ignoring VAT, that's number one. All right. So poor record keeping. As a business owner, when you start a business, you need to be aware of the implications of the decisions that you are taking. One of that decision is poor record keeping. Poor record keeping on its own sinks your business. Sinks your business, especially if you have employees. Especially if you have employees, because record keeping works as a control measure for you and your business. When you have poor record keeping, that means you are allowing your business to experience pilferage. Pilferage or theft. That means when you're not controlling your stock or having procedures for your inventory tracking, that means you might lose that stock without knowing. And because business, especially business when it's running fast, there are a lot of components that are running that you might miss other things because you have pressure. And that pressure, if you have poor record keeping, you can't do an audit trail. You can't do an audit trail to trace your system. So you need to have a structure in your record keeping. So having missing documents can lead to audits. For example, if you are doing your things properly, Zimra doesn't find you that much. But if they find inconsistencies in your returns filing, or especially if you are doing late, your returns are being filed late, and your returns are being filed with new returns. When your business is filing new returns, Zimra might get suspicious and might pay a visit. Now that they are using terms, they have your details, all your details, because terms is connected with the registry office. So your ID number is linked to your team. So now they can easily trace you. Sometimes they even call you uh, without you supplying your phone number, because now they have access to the central registry and other sources of information. So filing new returns because of poor record keeping might put you in trouble. They might garnish your account. When your account is garnished, you are in trouble. Mainly and mostly, they would want to trace all what they think you are required to do as a business owner. So you need to have a proper recording system. The proper recording system that you can adopt is, all right, you need to have a structure, because when you put this in any structure that is simple, you have your sales, right? When you are in business, you have your sales, right? You need to have a record structure, recording or record keeping structure for your sales, right? Then you have your purchases. What we call purchases, these are your purchases or your expenses for resale products, especially if you're in stock, right? You need to have a structure for your purchases. For example, in sales, if you are dealing with, if you are in the FMCG uh, industry, you need to have a day-end structure. When people or your employees sell, and how do they close their day end? How do they balance the sales they have made? If you have a system, you need to work on that system. For example, a point of sale system or an accounting system that records your sales. or your invoices and your received payments, you need to structure how different payments methods are recorded, because you are receiving maybe payments in Zig, you are receiving payments in USD swipe, some you are receiving in cash. Then on your purchases, you need to also to do stock counts, where you determine your opening stock. For example, opening stock on a weekly basis. If you are still a small business, then you need to monitor your purchases that you have done that week, right? Then you need to monitor your closing stock. When you have all these three things, when you add opening stock plus purchases, you get this number. Then you less closing stock, you get your what we call cost of sales, which is a key metric in comparing your sales and your cost of sales. And when you have a cost of sales, you can easily see if you're making money before going down to the operational expenses. Operational expenses are like your rentals, your fuels, your other general and administration expenses. So the first step is you need to monitor your sales. You need to have a record keeping structure on your sales. Then you need to have a record keeping structure on your purchases. Then you need to have a record keeping structure on your operational expenses, what we call OPEX. How do you monitor your expenses? Like for fuel, for rentals are easy to monitor, but these recurring expenses that happen on a day-to-day operations, you need to have a record keeping structure for these expenses, especially your company if it's mid-sized. You can't handle everything alone, but if you have a structure, a record keeping structure, you are able to delegate tasks on sales, on purchases, on your operational expenses to people, which with a system that you can easily monitor. Without with this will reduce what we call pilferage, right? So poor record keeping also is a red flag, especially when you have registered for Zimra, especially if you are registered for VAT. You need to have a proper record keeping system, because VAT might become a huge cost for you if you are not recording your things properly, right? Are we following along together? Are we following along? Yes. So let's move on to mistake or deadly mistake number 4. So we've discussed deadly mistake number 1, which is not registering with Zimra within the stipulated period, which is 30 days after registering your company, or when you have received the certificate of incorporation. Then after that, you need to uh, we need to monitor your monthly sales, so that you monitor your monthly sales so that you can't ignore VAT when you have crossed the threshold. Then you need to have a proper record keeping structure. This not only for the Zimra purposes, but for the growth of your business. Record keeping will you do a great favor to your business when you have a proper record keeping structure, right? Then uh, deadly tax mistake number 4 and 5, late filing. Late filing. This one is uh, a deadly mistake, because with the introduction of terms, now it calculates automatically. It calculates automatically the number of days you have missed. You have missed without filing a return. So around last year but one, Parliament enacted an act to say when you miss a deadline of filing returns, it will charge $30 a day. or equivalent, depending on the return you have filed. If you have filed a return that is in USD, it will calculate in USD. So if you miss or you submit your late returns, you might find yourself having overdue or Zimra sending you emails that you have an overdue debt that you need to pay because of late filing returns. You need to have a structure. If you have a payee, it's filed on the 10th of every month, right? If you have VAT, it's now filed on the 15th of every month, right? Usually, previously it was filed on the 25th, but VAT depends on the category that you are on. Category B and C, they are filed after 2 months. For example, January, and it usually work this way. It says December and January sales return will be submitted in February before the 15th, right? Then February and March sales, they will be filed April 15th. So you need to take note of these returns. Then we have what we call QPDs, or quarterly payment dates returns. They are filed per quarter, each quarter. So one is on March 25th, the other one is in June, if I'm not mistaken, the other one is in September, the other one is in December. This is for what we call QPD, quarterly payment dates. This is for corporate income tax. So we have different tax types, and you need to understand what payee entails, what VAT entails, what corporate income tax entails. If you are registered as an informal operator, we have what we call presumptive tax. Presumptive tax. So you need to understand of all these tax and their deadlines. Now, what Zimra is doing since the introduction of terms, for you to have an SSP account, they will need your ID, right? As I said, it's now uh, linked with the registry office. They have servers that links every ID. Now Zimra has every ID. Previously, they wouldn't access that easily. Now it's being accessed by the system automatically. So you need to take note of that. So you need to file your returns in time, right? You need to file your returns in time. Are we moving along together? If you are, that's great. So mistake number 2, mixing finance. This is a huge one. This one is a huge one for small businesses, especially in Zimbabwe. You can't trust easily, and also you can't usually not have. Most business owners are operating on a cash basis. Most of sales are 85% cash, right? And when they are 85% cash, cash is very susceptible susceptible to manipulation or theft. So most business owners, they 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 would prefer to have their cash on hand. But I understand that you can separate those finances, and by starting on that way, you can easily delegate the treasury of your business finances to someone else. if you have a structure. All right. So you might easily have different bank accounts for companies, but for the cash basis, it's very difficult. And I have a solution for you, a tool that you can implement in your business and you see how it works. So you need to open dedicated business accounts to protect your deductions, especially when you're dealing with Zimbra. You need to have what we call source documents. These source documents you can give to your accountant so that they can tell you how your business is performing. Because what you need to understand that finance or numbers is the language of business. Is the language of business. And for you to be successful in the running of your business, you need to understand or you need to be able to speak this language. Not fluently as accountants or those specialized in it, but you need to understand the language. The first step is to understand your source documents and separating your personal and business finances. So in Zimbabwe, what do you do? Now we have different tools to separate cash, your personal cash, uh, and your business finances. What do you do? Now we have tools like spreadsheets, right? Spreadsheets like Excel or my favorite, Google Sheets. This can work for you to separate finances. Let's move on to the next um, um, slide. All right. So this is a Google Sheet account, or this is a Google Sheet statement that you can easily also view on your phone, on phone, on the go, wherever you are. You can have this Google Sheet uh, prepared for you, and you can monitor your monthly cash in and cash outs for your business, and also have these running balances. So if you are seeing this example, you can see how we are using this Google Sheet to implement or to track finances easily for a small business. So we have what we call cash in. This is from the sales side, right? And if you see, these are day ends, 30, 1. This can be verified to the system of the people or of the business, of this business, to say in Wesley, their shop, they sold 720, right? We can easily verify this by going in their online system and verify if they sold 720, because this is a cash basis. When they've received cash, they highlight that this is cash in their system, right? This is swipe, this is transfer. It can be easily monitored from a system, right? So you have this Google Sheet for you where you input your opening balance here. Yes, you can input your opening balance here, then it uh, calculates your running balances. This can easily work for you, especially if you are dealing with cash and you can easily mixing finances, your personal and business. Because when you make a business transaction, you can easily highlight that. Then when you make another transaction, when you make another transaction, these are expenses, right? When you make another transaction, and you have these running balances, right? Calculating exactly how much you should have been left with in the business for cash. And if you want uh, to deduct cash from your business, you can put yourself, let's say you have deducted $300 for your personal use. Then it will automatically say your business is 1,000, right? Then this way you can easily monitor and separate business finances. Are you finding this helpful, right? I hope you are, because these are important uh, tools that you can use to monitor your business. Then, when you are still small, very, very small, you need to have a structure on the go. The foundation is Very important when you're setting up business. There are tools for invoicing. For example, there is a tool for invoicing that is called Zoho Invoice. You can go on the internet and Google that, Zoho Invoice. This system is a free software, an online software, where you can create invoices and send to your customers. And you can easily monitor what said you need to monitor your monthly sales. That is if you are not dealing with a lot of transactions. When you're not dealing with a lot of transactions, you can use this Zoho invoice system. Because when you grow, you need other things. So you can start preparing now the foundation of your business. Because when you are strong at the foundation, it will be easy for you to implement other things that are required by the business in the future. Because I tell you, you will not work alone in the business. You work with people, and when you are working with people to move your business, you need to have proper systems set out. The first process is separating your finances. You can separate these finances with a simple tool like this Google Sheet. And I said you can have this Google Sheet on your phone, and you can have someone updating the cash account or your cash movement while you are doing something else. And also you can easily verify, let's say this transaction, for example, these people have a system to monitor. These are purchase orders, what we call purchase order numbers. When they want to buy something, a purchase order is created and you can approve it on the go. If you have an online system, then you authorize that this thing needs to be purchased. So that's how you monitor what we call OPEX. Or you can have someone you know, or someone in the organization that approves these things, but with you also being able to do an audit trail, right? So this is so important for your business. It's so important that you have these things, right? So we have talked about the deadly mistake number one. We have talked about the deadly mistake number two. First mistake is not to register on Zimra. Another text mistake is ignoring VAT. Another text mistake is uh, poor record keeping. Then we also talked about late filing. And also we have talked about mixing personal and business finances. So now we go to the deadly text mistake number 6 and number 7. Uh, then for this one, number 7, it's poor advice. When you start a business, yes, a lot of people will advise you. Some will say this way doesn't work, this way doesn't work. But you, as a business owner, you need to work on your intuition to know what's good for you and what's bad for you. But you don't usually need you don't go to the poor advisors. That's why uh, it's so important that you equip yourself with the knowledge of how things, the basic things, are done, so that when you want to look for advice, you can easily spot this is bad advice. This is not the actual way things are done. So especially in matters of tax, you need not untrained people to have you handle or give you tax advice. Especially now with terms, you can end up in debt or in serious trouble that your business you might uh, collapse because of poor advice, or you might take a lot of years doing uh, what we call uh, fixing up the foundation that you'd have mended when you were starting to build. So you need to have advisors. So you need to choose the tax registered experts or trained bookkeepers, because you might think you this is cheap, but it will be expensive for you. It might tend to be expensive for you in the future. Expensive for you in the future, because you might take 5 years to correct the foundation you would have mended earlier on. So you need to choose your advice wisely, and you need to equip yourself with knowledge of how things are done, how operations are done, uh, the basics of text, what's needed, then you can easily delegate or say, I need a consultant, do this for me, and this and this and this. Because when you go to a consultant or someone without explaining your problem properly, some people cannot give you proper solutions, and you might think you have gained the right solution, but you have gone to a consultant who files new returns. This will come to bite you. So, for example, what terms are doing is when you file new returns for new returns, right? What it's doing is it's not giving you a full year, a full year tax clearance. So they know that when you want a tax clearance, you come and you not be able to receive that tax clearance from the system automatically. Then you need to revisit Zimra. When you visit Zimra now, they can easily catch you. Why are you filing new returns and also requesting for a tax clearance? You are doing business, but you are not paying a fair share of the profits or of the taxes that you need to pay. This is a dangerous move that you need to avoid. You need to avoid paying, uh, filing new returns. But you can only know which returns are correct and which ones are not correct. Because when you equip yourself with the knowledge, you understand what, what, where do I check and how do I check the work that has been done, right? So, uh, that's text number 6. Our last text mistake is no text budget. So when you are doing when you are doing business, you need to prepare for a lot of ifs in business. But you need, when you are equipped with the knowledge, you understand when should I save money for VAT? When should I save money for income tax? How much did I make in profits? And what are my obligations for the profits that I have made? And how is it done? Then you can easily delegate. So you need to have a tax budget. This is a last mistake, but it's not important that much if you are doing all things correctly, especially on the financial side, financial record keeping side of your business, record keeping side of your business. Because when you are tracking your sales properly, right, and you are seeing your numbers correctly, and you are recording your purchases correctly, right, and you have the OPEX in order, you can easily see where your business is going. If your business is making a profit or you are just busy, because in business as an entrepreneur, you are there to make a profit. You are not there to keep yourself busy. You need to make a profit and reinvest and diversify as you grow. Most people or most businesses, they have their hands on this, but these two, they are in the dark, of which it's important to track this. It's also important to track your purchases. It's also important to track your OPEX or your operational expenses. So You have now known what are the mistakes most business owners make. Now it's your choice. Where do you want to start with? Do you want to start with the proper recording system? Go and research about proper record keeping system in regards to sales. Sales on its own, on purchases, on OPEX. I've given you a highlight on how you can track your purchases using that old method of tracking your opening stock. You add your purchases, then you less your closing stock. Now you have your cost of sales, and you can easily compare it with your sales you have made for that period. Let's say you made 1,000 and it cost you 600 as cost of sales. Now you have 400, right? Is your gross profit. Now you know a percentage of that gross profit. Now you know that whenever you sell, this is gross profit margin. What does gross profit margin mean? It means for every dollar that you are going to sell, you retain or you are left with 40 cents. You can easily plan on this without mixing other operational expenses, because now you can easily calculate what is your break even point. What is the break even point? A break even point is you knowing that for me to, because usually your operational expenses are fixed. Let's say you have your 2,700 operational expenses a month. These ones, they need to be paid whether you make sales or you don't. But if you know your GP margin, you can easily see how much sales you need to sell on that period for you to cover these expenses. And also, how much do you need to sell to make $300 profit? So it's so important that you track your sales as well as your purchases, but using that method of uh, opening stock, especially if you are in the product-based business. In the services-based business, it's a bit simpler. You just know your sales and your expenses. But in a product-based, you need to track these in their order. Are we? Is this clear? I hope this is clear. So now we have talked of all the seven mistakes small businesses make in regards to tax. Now, what is the bonus tip? If now they've closed the window for voluntary disclosures, but around 2023, Zimbra was doing rounds asking for people to voluntarily disclose uh, where they missed or where they didn't do things properly, so that you can fix your past errors safely. It's a very bad that Zimbra finds you to come to you, because in my experience of all the people I've known that Zimbra it will usually end to in courts. You go to court, and sometimes with their estimates, you might find yourself even not having have touched that money or the amount of money they will be talking, because they assess based or estimate based maybe on a monthly a peak season month. Say it's July, you made 60,000 sales. They would estimate that you were making 60,000 sales all along. So it's so important that you do voluntary disclosures with Zimbra, and you prepare yourself for everything that comes with uh, being compliant in Zimbabwe. As I said, times is changing the game. Times is changing the game, and you should be in the forefront. to know what's done. Because if you are not knowledgeable about how terms is working and what are the implications of not being compliant, you might end up in the next 2 or 3 years, you might end up closing your shop or having your properties taken because you didn't take the chance to understand and to do things the proper way. All right, so thank you very much. Uh, just a quick heads up, we have a tax basics course for entrepreneurs that's running next week from the 26th of May to the 31st of May. What you get here is you know everything to do with Zima in basic terms. That means you have an interface of terms, you understand the general compliance requirements that keep your business safe, that keeps the business safe, right? You understand VAT, where we have input and output, right? Then also you understand payee, how it is calculated, the employees' payrolls, employees' taxes, all the taxes, employees' taxes, right? And you get templates, spreadsheet templates of how you can calculate your employees' taxes without a hassle, which is automated. You just put your basic pay, and it will learn how to do to calculate corporate income tax and how to do returns filing. With this course, you'll be empowered to go in the business and knowing what are the requirements or the tax basics that you need to know so that you can avoid penalties and you can also master how returns are done. Now you can delegate with confidence, and now you can delegate to the rightful person that you know that this person will do as you have instructed. Because when you are knowledgeable of something, you can easily see who's good and who is not. And now we have a bonus uh, offer that we are offering for those who are interested in joining our next cohort that is running next week. So the course is going for $50, right? $50 USD. But for the first 10 people that who are going to sign up before before 22 May, before tomorrow ends, they will enjoy a 40% discount. A 40% discount. That means you will only pay $30 for the first 10 people. So if you would want to grab this offer, you can direct message the aligned solutions number, WhatsApp number, by just saying text 3, right? That means you pay $30 for the 6-day course if you are interested in joining this cohort. So just text 3 and we'll instruct you on the payment details of how you are going to pay, and we sign up for you in the next cohort that is coming. Thank you very much for attending this session. I'm so honored that you joined me in this webinar. What are your next steps to sustainable tech success and your business success as well? Register early, stay compliant, manage your taxes. Thank you very much for attending this session. Thank you. Siyabonga.